According to the Office for National Statistics, public sector net debt exceeded 100% of the country's GDP for the first time since 1961. With state-controlled banks excluded, public sector's net debt totaled £2.5 trillion, or 100.1% of GDP. The ONS said that the government borrowing reached £20.04 billion in May, beating the consensus estimate of $19.5 billion from a Reuters poll of experts. For more on these headlines, we're joined now by Efosa Aluyi, who is the head of investments at Sankore Global Markets. Efosa, you're very welcome. Thank you so much for joining us.
Thanks for having me.
Starting with China-U.S. relations, what does this Biden remark do to that with Blinken, who was just there a couple of days ago?
I think you have to think of the whole China-U.S. thing as a long-term play. It's a long game, U.S. versus China, which is, for us in-house at Sankore, is a major thing that we look at on a regular basis. That continuous tussle for supremacy really is going to continue to hold sway. Like you mentioned, I mean, the Secretary of State basically is just coming off of a meeting where he actually met with Xi Jinping. And my understanding is that President Xi held off until probably the last minute to confirm that he was going to meet with Mr. Blinken. So it just tells you how frosty the relationship between the U.S. and China has been. That relationship essentially looking to thaw a bit, but again, the underbelly remains really very challenged. So, but I think that they will continue to work at it to ensure that, the best, comes out really for the globe. At the end of the day, these are the two strongest contending powers on a global scale. They're just not competing militarily, they are competing economically as well. So a lot of issues at play and at stake here. So those comments are really not unexpected from President Biden at this time, really.
All right, you mentioned the economic competition, electric vehicles, that space heating up. Well, what do you make of this $72 billion in tax breaks announced by China?
I think it's a part of a broader measure by the Chinese government to really prop up the economy. We've seen right after the COVID lockdowns and the whole reopening late last year, we saw the economy really pick up quite strongly, but that growth has since faltered. And just last week we saw the central bank there basically reducing the rediscount rates on 1 year rates. Also went ahead to do that for 30-day notes as well. So this is just part of the broader measures to try and prop up the economy. I mean, this tax breaks have been on since 2014. It was renewed in 2017, was renewed again in 2020. Same thing happened in 2022. So this renewal, it's not new. Again, it just reinforces, China's desire to keep that economy growing, really, because the data that we've seen over the last week or so has not been encouraging. We've seen retail sales really falter. We've seen fixed asset investments also falter. We've seen youth unemployment, the unemployment level for people between the ages of 16 and 24. That has really soared quite significantly. Don't forget the significant challenge in the housing market as well in China. So these are issues that the authorities continue to grapple with, and I think this tax break is essentially part of broader measures to really prop up the economy.
Thanks for mentioning those struggling numbers coming from China's economy. The Wall Street banks have been downgrading the economic outlook for China. What about you guys? Did you downgrade as well as Sankore? I mean, what do you make of the outlook? So UBS, Bank of America, JP Morgan, Nomura. Yeah. I think even HSBC yesterday as well, Goldman. Yeah, what do you make of that development there?
I mean, if you look at the downgrades that we've seen on average, we've seen about 50 basis points downgrade if you average that out. And that's really significant for an economy like China. And it really isn't far-fetched from the fact that the recovery is obviously beginning to fall short of expectation. The economy was significantly bogged down last year by these COVID lockdowns, right? And at the reopening, the expectation was that we would see, a really strong run, which we saw really in January and in February, but that then started to falter. I think that basically reflects or highlights, the soft underbelly really that we're seeing for the economy. The fact that the property market remains significantly challenged. That market, or the property sector, accounts for about a quarter of China's GDP, right? So as long as that sector remains significantly challenged and, strong or even bold moves have not been made to really adequately address the issues in that market, you're going to continue to see these issues, really. If you throw on top of the fact that you're also seeing, weaknesses in the global economy, right? You look at, Europe, for instance, you're seeing those weaknesses, which is also then reflected in, the drop in exports we're seeing from China. And the economy has essentially been export-led for quite a while now. They've not been able to significantly pivot away from that. So these are the issues that they certainly would have to, contend with, in the near and medium term.
All right, let's hop across the pond to the UK. Net debts exceeding 100% of GDP. What's the impact there when you have debt that high rising in the UK?
I think the issue is probably a bit more concerning now when you have interest rates where they are. We've seen interest rates rise very aggressively. The Bank of England has executed 12 consecutive rate hikes. We're seeing that having not just an impact on the overall economy, we're seeing that impact on households. You're seeing that impact on mortgages as well, because the mortgage system in the UK is largely variable. So these mortgages, not unlike the US where you lock in a mortgage for 30 years, right? In the UK, those mortgage rates are reviewed on a yearly basis. So as these rates rise, as the Bank of England tightens to try and rein in inflation, you're going to have that impact on the mortgage market. You're going to have that impact on consumers as well. But if you even shift to what is going to happen to the government, as the government debt rises in a period where you're having very high interest rate, it therefore creates, very, very strong fiscal stresses around, the UK government. So this is very, very, it's very concerning, particularly the fact that, debt is rising at a time where interest rates are also on the rise.
Well, you mentioned interest rates rising. So inflation, still 8.7%. It didn't change, but the forecast were for 8.4%. Are we still seeing UK citizens being squeezed at this point?
Absolutely. For that inflation report, I think the major concern, beyond the fact that, it printed above consensus, with the fact that if you look at the core number, that's the highest jump in month-on-month core that we've seen since March of 1991. Wow. That is very instructive and that is very strong. It just tells you that these price pressures still exist. Although if you look at the UK, a lot of it has been as a result of supply side issues, but these take time to be dealt with. In the interim, really, the BOE almost has no choice. Just has to continue to try to rein in that inflation because of the debilitating impact that long-term inflation can have on consumers and on households. Okay,
so thanks. You preempted my next question. So they meet, I think, tomorrow, right? Inflation target is still 2%. So no choice. They have to hike tomorrow.
They have to. I think the BOE will execute its 13th consecutive rate hike tomorrow. That's really a foregone conclusion, really. They're going to have to do that, particularly with the inflation report that we saw this morning.
So at this point, if someone wants to ask you, look, should I invest in the UK? Is it an economy that is still, what's the word to describe the UK economy? Struggling or barely above water when you put all these debts, inflation, and all these things together?
I think it's a reflection of how hard the Europe has essentially been hit by a myriad of factors coming in from last year. If you look at the Russia-Ukraine situation, Europe was the hardest hit, right? You look at the energy situation too, where energy prices essentially, skyrocketed for the better part of last year. Europe was hard hit as well. And you look at the fact that, that monetary or economic union, if you will, that the UK essentially pulled itself out of, hasn't quite helped, from the economic standpoint over the last couple of years, really. So that's something they're having to grapple with, and then having to also deal with the situation that Europe is facing and the impact that of, the whole Russia-Ukraine situation, decades high inflation that we're seeing in the global economy. Europe, I think, has been left, the worst, really. If you look at inflation in G7, the UK has the highest. Again, this is just a reflection of the fact that that economy really is struggling right now. It really goes really without saying at this point in time, yeah.
Wow, so it's tough times for a lot of these economies, especially the UK. Carlos Ghosn is suing Nissan for $1 billion. So much drama around his escape from Japan, where he is now. Are we to see more drama going forward in this saga?
I would think so. You certainly see more drama. This suit was filed in Lebanon, right? And the active defendants are pretty much all in Japan. So whether the Lebanese authorities would then be able to convince or maybe compel, the active defendants to, participate in this trial or in this suit really remains to be seen. My suspicion is that that's not going to happen. So you're just going to see these suits just flying around. It's going to be long drawn. Obviously, even more drama, right? Remember that, Carlos Ghosn's trial is still pending in Japan, right? So he's still wanted in Japan. He's still a fugitive in Japan. So these are, issues that will just basically throw up all kinds of, drama really going forward. At the end of the day, I think he's trying to do the best that he can to sort of repair an image that's been pretty much dented.
Right. But you don't see this affecting Nissan in any way, right? Anybody who's going to, not as far as the business going forward, how do you see that playing out for the company?
Well, on the perception side, there probably will be some impact, right? At the end of the day, more things become unearthed, more things become unraveled as to what exactly happened in that situation. It really has more to do with maybe the corporate governance and corporate culture in Japan and the legal system in Japan as well. So all of that is obviously going to continue to come under scrutiny, and it could have some knock-on effect on Nissan, but I don't expect anything significant.
Efosa Aluyi, Head of Investments at Sankore Global Investments. Always a pleasure having you on the show. Thanks for joining us to discuss the global news. Appreciate your time.